Hi, this is Stuart Cooper with your mortgage market update for the week of July 22nd, 2022. So we're definitely seeing some momentum in interest rates. We're definitely seeing improved pricing, and it all has to do with the economic forecast, not only in the U.S., but around the world. So let me just share with you this housing newsletter that I send out every week. And it says lowest rates since early June, so we were definitely seeing some improvement in pricing. And then we're going to go over, I'm going to show you the candlestick charts just to show you where rates have done this week so I can kind of validate it. But the key thing here is, and this is really telling, is the Philly Fed Index is one of the several economic reports that captures relatively broad economic momentum. And it's right here, and you can kind of see right here in blue where we're at. And it's not great, right? It's actually really bad. But look at the forecast. Look at the next 6-month outlook. It looks really bad, and that's why we're seeing a rally for mortgage-backed securities and why rates are improving right now is because it looks like the economy is about to fall off a cliff, not only in the U.S., but around the world. And this is another reason why. Here we have current mortgage rates. We're right here, this little orange right here. You see how it's about 2.7, 2.8. But if you look at the 10-year Treasury yield, it's dropping, right? Well, interest rates should follow that. That's why I think rates will improve over the next couple of days. And then here's just some more data if you're interested. It just shows you, existing home sales in the U.S. You can see that the inventory is definitely creeping back up. It's nowhere near what it was in the past, but it's definitely improving, but not, I wouldn't say dramatically. Existing home sales, the amount of homes that are actually selling is definitely dropping down, but that kind of makes sense. And this is huge. So when you see builders' confidence drop off, they're almost 100% right about what's going on with the economy as far as the housing market. All right, so when they're not confident, pay attention. And once again, here we see housing starts and building permits both down or dropping. And then here's interest rates. Definitely it hasn't really shown up yet, but we'll see this dip a little bit in the next couple days. So let's take a look at the last 5 days on the 10-year Treasury. We currently ended the day at 2.754, which is the lowest we've had in quite a few months and since June. And you can just definitely see Thursday and Friday, we definitely had this really strong rally where interest rates are coming down. Monday, Tuesday, Wednesday was kind of sideways trading. Nothing to talk about, but Thursday and Friday, we're definitely seeing the momentum of lowering interest rates. And if I go back, let's just go back 6 months, you can definitely see how rates have gone up over the last couple of months, and now we're starting to see it come back down a little bit. So if we look here at the key levels, you can definitely see that we're now shifting over to the green, this is like a floating indicator. So just real quickly, if I just look at this quickly, it tells me that the momentum is toward lowering interest rates. That's what it means when it's in the green. So we're not way over to the left, but we're definitely moved over because a week ago we were definitely over here. So we can see the momentum has changed a little bit for improvement in pricing. So let's take a look at the economic calendar for next week. You can see Monday and Tuesday, not a lot of information, but Wednesday we're definitely going to start getting some information. Durable good orders, it's expected to be negative 0.3. That's a good indicator. But here is the more important one. This is the Federal Open Market Committee. You can see right here the forecast is expected to be 2.375, so an increase of about 7/8 of a percentage point. That's what the market's looking for next week. So until then, that's going to be huge. That could really affect interest rates one way or the other. And then Friday, but this is the key decision right here. This is what we're looking at for next Wednesday. This is where the volatility is going to be. All right, guys. So anyway, I hope you have a great week. If you have any questions or comments, please, feel free to make a comment in there, and I'll try to get back to you on it.